I found 5 ways to massively increase your credit limits. Higher credit limits help you lower your credit utilization rate into the single digits. Additionally, higher limits help you improve your credibility with new banks because they can see previous lenders already trust you with high credit limits already, which makes you less of a risk to them. So in a second, I'll show you how I would fill out a credit limit increase application, along with the #1 way to guarantee a high starting credit limit. Now, at this point, I've received a ton of credit limit increases across all of my credit cards, and they have one thing in common. I manually requested just about all of those increases. If I hadn't done that, then my total limit would be more like $100,000 instead of $200,000 on the personal side alone. And always be aware that there's still some old school credit card issuers like US Bank that are still going to hard pull your credit report just to see if they can increase your credit limit. But most of them have thankfully left that practice behind. So let's check out how I would fill out the applications. So the first section is my total annual income. They ask you for that first because it's the most important on the application. It's going to determine how much credit you're going to be able to repay on a monthly basis. So the first income obviously is going to be your W-2 as an employee income. So everything you earn from your job, you can include, but you can include so much more here. You can include side hustles like Uber Eats, DoorDash. So if you're doing something on the side, even if it's a couple $100 a month, you can add that on to your annual income. If you sell any items on eBay, I know I've doing this for a long time, over a period of years, I would earn a couple hundred to a few $1,000s a year just from selling old items on eBay, and you can include that as your annual income as well. And here's a big one that virtually everybody forgets about, is that you can include the income of somebody who lives with you, that you share bills with, that you have access to their money in a reasonable way. Maybe you share an account, or you don't even have to share an account. You can just have them sending money to you via Chime, via PayPal, and you just need to be sharing money and have reasonable access to their income, and you can count their annual income as part of yours as well. And this was really made to help people that were stay-at-home parents still be able to qualify for credit. But in this case, it's gonna work for just about anybody who's over 21 years old and you have access to someone else's funds. Next is employment status. Now, you always want to choose employed. I cannot stress this enough. Every other option other than employed is just inferior. So unfortunately, if you're retired, then that's going to be a little bit inferior to being employed. They're going to see you as not earning as much. Typically, you're not going to be earning as much in your retirement phase, and they want to see you gainfully employed. Now, being employed is seen as the most trustworthy, reliable, the source of income that banks can really count on, and they're comfortable with risking and lending to you. Now, the riskiest selection you can make is self-employed. Now, self-employed is a little tricky because banks and lenders want to have a deep understanding of the track record of your business. And when you have a small business, like a lot of people have, even myself, they want to get a deep dive and have a really good understanding that you have a long time frame of earning a really consistent amount of money. And so when you choose self-employed, you're opening yourself up to a lot more scrutiny. So to be able to choose employed, even though you have a small business, you can actually run payroll for yourself and issue yourself a pay stub. And we're going to talk about that a little bit later, and I'll show you exactly how I issue and pay myself and issue my own pay stubs as well. Next is occupation. Now you can choose whatever you want here. You want to be very honest here, and you just want to choose something that's acceptable. Obviously, just if you're a nurse or if you're an engineer or a software engineer, then choose those things and just write it in. Next is monthly mortgage or rent payment. Here, I think the best thing to do is to only choose the portion of the mortgage or rent that you're responsible for. So if you're sharing a place with somebody else and you pay half the rent, or maybe you pay a third because you have a smaller bedroom, just state how much you actually pay, because that's going to be able to improve your debt to income ratio. Next is how much will you spend each month on this credit card? This is more of a behavioral question, and the way I always like to answer a behavioral question is the way the bank or lender wants it to be answered. They really make money when you're using their credit card often, so frequently, and you're using a higher percentage of your available balance. So for most cases, a decent percentage to shoot for is at least 30% of your available credit limit. So if you're shooting for a $10,000 credit limit, I would state that I'm going to use at least $3,000 of that limit. Next is maximum desired line. Now, this is another behavioral question. At first, I was really skittish and a little skeptical of choosing more than just like $1,000 or $2,000 more of my already available limit, but I've really turned the corner on this one. And I found that to get the best results and get the highest limits, you want to choose the absolute maximum available limit known to that credit card. So instead of shooting for like a $15,000 limit with the Venture X, we know that it goes up to $30,000, and for some people it goes above $30,000 in that maximum credit line. So you shouldn't be shooting for anything below 30K. What the credit card issuers will do is they won't immediately deny you. What they're gonna do is just counter offer you with whatever limit they are comfortable with giving you. You know, Capital One seems to ask the most questions of them all. That's why I use them as an example here. Another behavioral question is, why are you requesting this credit line increase? So the way that I like to reverse engineer what the credit card issuers and banks wanna hear is what's gonna make them the most money. And so if you can reverse that, then you're really gonna get close to the answers that they really want to see. And so for this question, I would say I expect higher expenses over the next few months. And the reason why I would choose this option is because it says that your expenses are going up, and they're going up for a extended period of time at least. So they want to see you using a higher percentage of that credit limit, and they want to see you using that consistently for years to come. That's going to make them the most money because they make at least 1 to 3% on interchange fees when you use that card and transact at merchants. And so this is going to be the best answer that's going to show them that you're going to use this card at the top of your wallet and spend significantly and very often. Also, don't forget to download my free credit limit increase cheat sheet. This is a real game changer. It gives you 7 additional ways to increase your credit limit, additional strategies that you can use. It's free, and just click the link down below. The next way you can increase your credit limit massively is by making a high initial deposit and continuing to direct deposit into your bank account. When you first start a relationship with a bank, you want to open up an account, but at the same time, you want to deposit at least a few $100s, if not a few $1,000s into that bank account, just to establish that really strong relationship with the institution that you're working with. And so when you open up a bank account, let's say you deposit $200, you want to consistently direct deposit $200 per month for at least 6 months to a year. For example, I covered one person who signed up with Navy Federal, and they were able to increase their credit limit by $50,000 in 7 months. Can you believe that? They opened their account with $250 initially, and then they continued to direct deposit $500 bi-weekly for a few months. And I just want to tell you about a strategy that you can steal from me. I'm using it myself with a PSECU, which is a bank account I just opened. It's a really good credit union. And I'm using that in conjunction with ADP, which is my payroll provider on my business, Barton Media. Now, PSECU is one of the larger credit unions in the US, and they're known for giving really high limits pretty fast. So that makes this a great bank to start establishing a relationship with. Plus, right now their checking account is giving a $300 bonus, but that's only when you deposit $200 per month for the first 3 months. So here's the play that I'm running to get that $300 pretty easily. So what I'm doing is I run payroll for myself through my company, Barton Media, using ADP. And then I deposit at least $200 minimum into my new PSECU checking account. And then the remainder, whatever the remainder is, it gets deposited into my primary personal checking account with SoFi. And listen, running payroll is really crucial for getting approved for loans. So home loans, think car loans, and even credit cards in this situation. If you like to create pay stubs just like I do through ADP, right now using the link below, you can get a 20% lifetime discount just using my link. What happens is you'll make an appointment with my personal rep, Marika. She's gonna ask you a few questions about your personal side and business side to make sure that you get paired up with the right products with ADP and you can start running payroll. And just be clear that Cal sent you, and Marika will give you that 20% lifetime discount. Once that's finished, she'll continue to be your personal rep throughout the whole process. The next big strategy you can use to increase your limits is using multiple products. And what I mean by that is every bank is gonna have all these different products and offerings. They're gonna be a little bit different from bank to bank, but they're mostly the same. You're gonna have a checking account, you're gonna have a savings account, maybe CDs, secured loans, personal lines of credit, balance transfers. All you really need to do is just use a fraction of what the banks are offering, and they're gonna be absolutely thrilled with you. They're gonna want to establish more of a relationship with you, and they're gonna extend more credit to you. The very same person from that earlier example with Navy Fed who got approved for $50,000 in 7 months, did the same thing. They set up a secured pledge loan for $2,400 and then paid most of it off pretty early on, but that really helped move the needle with getting approved for more credit with Navy Federal. But the big takeaway I really want to hit home is that you want to use products that make sense for you. So you don't want to use anything that's going to have you going out of your way, spending more money than you normally would. You just want to see what organically you can actually use with that bank. The next strategy that you can deploy is increasing your usage. High usage is the second most important component of increasing your limits. A few targets I've seen work well for others is shooting for 50% usage on your credit card when you have a limit under $5,000 and at least 20% usage on that card when your limit is already over $10,000. So if your available limit is $30,000 already, then you really need to be only shooting for spending over $6,000 in a single month. Here's another example. One Apple cardholder spent over 20% of their $20,000 credit limit over like a 4 to 5 month period. And they were able to increase their limit to just north of $30,000 in 6 months. Again, the banks are charging those interchange fees, so they're making virtually 3% on every transaction that you make with each merchant. So this is an incredibly lucrative part of their business model. Now, the single best way to increase your credit limits is by increasing your income. And remember, like we discussed earlier, income comes in many different forms. We're talking employment income, self-employment income, rental income, investment and dividends, retirement income, alimony and child support, government benefits. And really the most important that I think everybody can get some use out of is a spouse's income and a partner's income. Again, if they live with you, or even if they share finances and accounts, or if they send you money on a regular basis, you can include their income to yours, inflating your income legally. Here's what Experian has to say about this. Your spouse's income can count on your individual credit card application. You must have reasonable access to your spouse's income, such as sharing a joint bank account or splitting finances. And that's straight from Experian. Now, something I learned recently, it took me quite a while to learn this, is that banks are going to extend usually starting at 10% of your total annual income. So if you already make $100K per year, they're most likely going to start off with a $10,000 limit on most credit cards. For example, remember that person with the Apple Card who got approved for a $30,000 limit? Well, their income was already over $300,000 per year. So that limit really makes sense for them. Actually, it was kind of on the low side for them. And just so you're aware and reasonable about your expectations, once you reach that $25,000 to $30,000 limit and you want to go north of that, banks will usually want to see hard proof. They'll want to see pay stubs and some sort of income verification of your business, bank statements like that, to verify you. So if you want those massive limits that go past $50,000, usually you'll need to have a massive income to go along with a massive credit limit. You know, there's a few mistakes that I've seen people make so frequently when it comes to increasing their credit limits. And some of those mistakes can have some pretty nasty effects, like getting charged interest, triggering hard credit pulls, and completely eliminating thousands of dollars in available credit. And that can easily tank your credit score. So check out this video next to avoid all of those mistakes. Thank you for watching.